Hello, folks. Brendan Chapman with you today. It's another TheoTrade Money video for TheoTrade. May 22nd, 2023. And today's title, The Unch'd Effect: Why Markets Feel So Hostile. You look at what's transpiring right now, and I have some lines drawn on the SPY, but I'm going to draw them right here. We just went through a period. This is called a diamond formation, right? Higher highs, lower lows, and higher lows. And we're working our way to the apex, and we broke out on May 17th. And it was a nice breakout. We cleared the prior highs, the highest close of 2023, only to stall on Friday and pull back a little bit today. And we actually rallied a little bit at the close today, up about 0.01%. If you look at the SPY, you'll see the cash session. Essentially, we're closing at the same level we were last Friday. And so why feel so uneasy? Why can't we just embrace the breakout and say, look, we're going higher? And so again, this is what I call the Unch'd Effect. And this is why the markets are feeling so hostile. First case in point, let's look at Google, for example. Google had made a tremendous run here, right? When you think about Google's participation or leadership in the S&P 500, Google, very significant. I mean, how do you feel easy up here when we've had such a phenomenal run in Google? What about Microsoft? Sorry, MSFT. Microsoft, well above 52-week highs, near extreme, right? We've made these massive moves in these big names. Apple at 52-week highs, eclipsing the entire market cap of the Russell 2000, which is rebalancing, which really doesn't matter a whole lot at all. But point being is that how in the world is this worth more than the Russell 2000 in terms of its market cap? Netflix, huge breakout on Thursday, and this is when I'd done some analysis on. We had some bullish option activity off the lows down here, and got the pullback, and then the breakout again. You know, this is one of the areas, one of the only stocks, these big names, that maybe has a bit more upside. We were targeting 250 as a trend trade off of the support here. But, but when you look at all the data, I mean, there's a lot of data right now that's pointing to what? The very high probability of recession this year, right? All of this transpiring, and all of a sudden you see a nice breakout, and then the market takes a pause for a couple of days, and you really begin to question, and you're saying, look, do I want to play the continuation of the upside? We're resting on prior resistance now as support. Don't I want to play this to the upside and capture as much upside as I can? Well, the problem is when you look around, you try to find bullish opportunities. Many of them you're going to find are at near-term extremes. Tesla, for example, this was up a nice almost 5% today, right? We came off a small rally here, a pullback, another rally. In the prior 4 days, we've gone from, if I click on the low here, gone from over 160. We're up 15% in 5 bars. In this case, we're talking about a daily chart, 5 days. How does that make you feel? Do you really want to get long Tesla today? Now, the great thing about options is that you can do it, and the risk is the amount that you're paying. But even at that, today, 26 May, 182.50. Well, we kind of blew through that intraday as we look at a 1-day, 1-minute chart. 182.50 was down here. We kind of broke through it, came back, retested it, and then we just rallied throughout the course of the trading day. The reason why you probably should be feeling uneasy right now is there's a lot of big stocks that are at a very extreme in terms of movement over the course of the last week, and for many, the top ones over the course of the last months. And so as we look at what's going on right now in terms of the volatility markets, the VIX 3M plus fixed ratio, it says, look, we were just above 1.2 on Thursday. We're kind of coming down off this. It's saying, look, the market is still pricing in the outlook for significant volatility in the coming weeks. And I know this has been delayed. We've been up here for a while. We have a debt ceiling negotiation that is still going on to some degree or another. And to some degree, that's taken the focus off and allowed other news to continue to percolate below the surface without really having to acknowledge what's likely going to happen this year, and that is the likelihood of recession. Okay, we're looking at interest rates, the TNX against the IRX. It's narrowed a little bit. We're at 3.7% on the 10-year. IRX is still sitting at 5.1% roughly. It's narrowed. Again, our probabilities of recession maybe come in just slightly, but we're not out of the banking crisis yet. In fact, as you look at KRE today, we're barely off our lows, right? We're still not back to where we were even a month ago. We never really got the bounce back here. The policy never worked. We've just basically set aside what's going on in the banking space right now. And the fact is, if we do engage in a technical default, delay some of these payments and some of the shorter term debt that's maturing in the next month, 2 months, 3 months, this may cause those prices to go down, which would only exacerbate the potential issues in the banking space, more steeper unrealized losses that may lead to further liquidity problems. So nothing is really solved right now. And so again, the fact that we're unched today just says, and maybe is just a reminder of those risks. Now, it doesn't mean that people aren't looking and traders aren't looking for bullish and bearish opportunities. And we'll go over a few of those in our session today. But it just adds to the fact that, look, there's no real established direction. Yes, the breakout happened. The expected move would be 403.50 to about 417.50, let's say. That's about 14 points off of the break of 413.50. That maybe gets you back to 430, which was our high from last August. Could we get there? Absolutely, we can get there. Can Google and Apple and Microsoft get more extreme? That is a real possibility. Can Amazon get more extreme? Yes, we've actually pulled back the last couple of days. Kind of a trade idea we talked about last week. The idea is Amazon has underperformed, but recently outperformed. Do we start to see rotation to stocks that are maybe underperforming, taking profits in some of these bigger stocks? As we look at the layout here in terms of sector performance, communications really was the leader today. And again, Google's a part of the mix. Meta is a part of that mix. You've got your AT&Ts and Verizons, which are not seeing the kind of Charter Communications. They're not seeing the type of response or rotation. Again, this is a Google and Meta kind of game that is driving communication stocks higher here. Meta up 1% today. But again, at a significant 52-week high. So again, this is why we should feel a little bit concerned about where the market is positioned right now. It makes sense that the options market's pricing in potential downside. And when you look at skew, this was as of Friday at 135. Yes, we tick lower, but we're still at a very elevated level as a lot of the certainties are not certain at the moment, and they're hedging that downside risk. But the thing is, with a higher degree of skew, high back month volatility, there's an element of preparation for what's happening in the market right now. And that is they're preparing for downside. And so it may require a move that really starts to move outside of those expectations, outside of what might be delta comfortable, that would engender increased selling and more of a significant rise in the VIX. So right now we're subdued because of the higher degrees of hedging. And so once we kind of break out of what is anticipated or what's being hedged, this is where you can get the bigger spikes in the VIX, but it's going to be more delayed. We're not going to as readily see as much selling unless we start to see a catalyst that's going to really start to push things to more of a near-term extreme. And right now, what's that going to be? Is it a technical default? Is it a downgrade? Is it additional bank failures? Or is it all the above? Because all of them are on the table and more, by the way. Okay, bankruptcies over the weekend. Lots of negative news, and again, just brings back the idea of the Unch'd Effect, right? We're just not ready to want to be really bullish. And high skew suggests that when we go up, we're going to see a higher frequency of small up days. And we're building that case for the crack to the downside. And we'll see as we follow skew and back month volatility, if those expectations continue to hold or further build. And so as you see, banks like US Bank, again, coming off very extreme lows, Wells Fargo. Again, you're seeing some of these banking and personal finance stocks, PayPal. I mean, are these stocks prepared to lead the way in terms of financials? Probably not. And so if we see any sort of weakness in communications, like your Googles, for example, that's going to really start to place a hamper on the market. And if technology continues to underperform and starts to slip more towards the lower end, start to see some down days, that's where the market starts to give back a lot of its recent gains. One technology stock today that was in the news, China is saying, oh, they're kind of doing the flip thing with regards to TikTok and other Chinese companies, worried about security concerns. Company is down about 2.85% today. We're currently standing on support at about 64.50, but there was some weekly option activity for this week, angling to the downside. This is the $25 strike price. You can see it kind of spilling out to other strikes out here. Let's look at the option time and sales. On the put side, it did kind of slip a little more towards the yes, but we're seeing a big sizzle. And again, we're seeing just a lot of buy side activity, particularly in the 65 strike. Again, 65 creates a significant level. If we were to break through today's low, this could create an opportunity for a bearish trade, looking at it testing 60, 57, 50, maybe even as low as 52.5, and maybe likely in the coming months as low as 50. But in the near term, maybe looking for, if we break 65, looking at a near-term target of $60. And again, that option activity can create kind of that gamma type of effect for micron that may help engender more downside as market makers have to hedge the long puts since they're short, and that means they're gonna have to short stock to hedge it. So watch the 65 levels. So I'm gonna move it up there a little bit, but again, break 65. This may help create some more downside. Today's low being a trigger for a potential move to $60. Let's look at some other ones. Rivian, and unfortunately I put the wrong number, but RIVN. Rivian's been just grinding it out the lows. You're starting to see more Rivian SUVs on the roads right now. My uncle bought one. I had a chance to look at it. It's a nice looking car. But he didn't get to choose the color. Nothing, right? It was just, they just gave it. Said, okay, you ordered one 2 years ago. Here you go. So people right now are takers in terms of these autos or these EVs. And we're looking at it right now, kind of trading at a range, topside resistance at about 1555. And again, we look at the downtrend here. Again, the expectation is if we break out of this consolidation, could we potentially go to a 1/3 retracement at 23, back to the highs, for example, from February? Yeah, it's a real possibility. Our near-term resistance, however, is right here at around 16. So near-term 16, break 16. We're looking at what, about $20 to $23 in here. And again, we can start to kind of measure what would be the seed wave, right? Well, we got a seed wave right here. Oops, and I need my fib drawing tool. And we can come in here and say, okay, well, if we click on the high, go back to low, you can draw out a projection. So you can see on the next swing, 18, the trend in the coming weeks to months, maybe 22. And so again, this is representative of a stock that at this point in time, it's like you can't really afford to be too picky. Just like or buying a Rivian, like you ordered 2 years ago, and man, whatever they want to give you, that's what you're going to take. And that's kind of what it is right now, right? The Unch'd Effect is so many things are overextended. You got to try to search the bottom of the barrel here, like a Rivian, for example, that's yet to produce a positive earnings, and say, okay, Rivian, what kind of opportunity are you going to give me? And again, on Rivian today, 26 May, 14 strikes. We're kind of sitting on that price point right now. Maybe look for a trade through today's high, or a breakout of 15, 16. The stock probably has a decent amount of short interest in it, but again, can we create that squeeze that could drive prices more significantly higher, like we've done intermittently in the past, like for example last July? So again, a lot of ifs in there, because again, is this the kind of stock that you want to really bank on and own for the long term? Probably not. Okay, let's turn our attention to a different kind of stock here, like GSM. Ferroglobe. Now, if you look at what this company does, they're in the materials space. They're a producer of silicon metal, manganese metal, special alloys, right? They have a lot of different quartz mining activities, hydroelectric power in France. They're really kind of diversified out there. But again, Ferroglobe, you're talking about, iron ore, and they got some stuff in ductile iron, automotive parts, et cetera, aluminum. This isn't exactly the type of company you normally say, hey, this is in a great position if we're entering a not just a U.S. but potentially even a global recession. But what we've seen is that on the earnings itself, it produced a rather positive result on high volume. We pulled back for a few days on declining volume. We began in the last 3 days. We've had a nice up move today, really kind of breaking through some resistance on good volume. We're kind of eyeing the prior high back here at 540. But again, could we be talking about a bigger move in terms of its trend? When you back this out, I've got some lines drawn on here already. A 1/3 retracement's like $6, which is right around the 261% projection off of what? Off of the seed wave down here, right? Before the pullback. 423 is at a 61% projection. So we're talking about a stock that, while in a cyclical area that doesn't necessarily match the idea we might be going to recession, again, we're seeing a lot of the disconnects here, and we're just trying to scrape and find something. And so off of today's move, it's probably not comfortable buying on the high. Again, you could look for a retest of the prior high back here at 477 or the midpoint of this candle, look for a bounce, and then look for a run to 530. Or if you're willing to stay in it for several weeks or maybe months, up to highs, going back to $6. And again, so option activity kind of led us this along with today's movement as a potential opportunity. When we talk about the top performer in the S&P 100 today, it was Pfizer. And again, Pfizer is a stock that's been down a lot. So do you bet on the stocks that have been up substantially like a Google, or do you take a stock like Pfizer that's been down substantially and pays a reasonably high dividend of 4.25%? Again, certainly maybe the product line isn't quite where it was a year ago. We just hear about the vaccines, et cetera. But again, the stock has come down quite a lot, down 36 from 56, 20 points. We're talking about close to 40% off its highs. And we tried to base down here. We broke through. But today's probably the strongest signal that we've had in a very, very long time of buyers accumulating and the stock finishing near the high and the volume itself being what? The average volume is about 26 million. We're at 84 million, over 3 times the average volume today, and the top performer in the S&P 100. And to boot, there was significant option activity in a number of options on Pfizer today. And so boy, you kind of look at the big blocks that are trading in here, even towards the close. The one I was kind of centered on earlier today, before my session in Pfizer. I got to find where I wrote it down. This is on the more than 26 May, but you see just a massive amount of interest coming in at the 38 strike. You see out here at 39 and also a 40 and I think it's 39, 38.5, and 38. You look today at today's option statistics, 45% at the ask, almost 10 times the average. Again, more on the buy side of the equation. And again, it just shows some pressure. This does help create a little bit of gamma if we see a continued move. But as we look at the most recent downswing here, you can see an equal high, higher low. So if we take our Fibonacci retracement, we come off our high down to the low, a 2/3 retracement has you at 40. You break 40, we're likely going back to 42. So this could be a potential income play if you're wanting to hold it for a longer period of time, trying to capture that 4% dividend. In that case, you may come out and say, hey, I've got a dividend right now that's paying. We just went past the ex-dividend day, but it pays 41 cents. Could you potentially go out for 60 days and buy some protection here? $35 strike price. You can come out of pocket at $37.50. Or if we go to September, that will get you through the next dividend. You can maybe come out to about 35 here. And again, cover yourself just below the support at $35. So you're risking about 375 plus, plus a little bit of cost for the put. But you have potential upside to 52, maybe $55 as we go back here, back to the prior high from October here. So again, we're trying to find stuff. Well, what, with so much overbought at this stage, where do you find stuff that's maybe a bit oversold? One of these stocks might be Jumia. This is one that it's a company that is high short interest, over 10% of the shares outstanding, the short ratio over 6 days. I've drawn these in the past as we look at short squeezes. This is one that I've, kind of isolated when there's more of a short squeeze, like for example, an upstart right now this is one I looked at last Thursday. We kind of targeted some highs here and maybe even more, a rollout to 2750. We're just riding this kind of just this move in upstart. Well, how do you find companies like that? Well, one way is to find what? Companies that have high short interest, that have bullish option activity, and maybe a catalyst can be the earnings. So today we saw a bit of covering, my guess, a higher volume today. We've seen another number of higher volume days recently over the last, really since about April 27th, and an earnings announcement that can create a catalyst that could create a short squeeze. This is going to occur before the market tomorrow. So again, we don't get that the ability to trade it now, but after the open tomorrow. So it gives you a chance to see, do we go higher, right? Do we beat? Do we raise guidance? Those things might create an opportunity where we could see a short squeeze going back to $5, right? Like we've seen in the past. We go back, there's been a number of squeezes like this, even bigger, for example, in 2020 back here. But recently, you'll see these kind of nice moves in the price. A similar type move would carry you back to some of those more recent areas here, closer to $5. But is there potential for even a bigger move? Again, it's going to depend on how much we can garner. But right now, a double from 3 to 6 would seem pretty reasonable, pushing you back to the 50% retracement if the earnings come out tomorrow and we do see that squeeze and a continuation. But today in Jumia, this was a 2 June, 4,700 contracts, and also out in the 26 May. Sorry, went the wrong way. 26 May, and you see here 3,300 contracts, mostly bought. We look down here at today's option statistics, 51% at the ask, four times the average, 15,000 contracts today. And so what you're seeing is, again, the potential, right, to help create some gamma, 350, $4. We start to break through these levels. It may help create even further gamma squeeze to the upside in Jumia. But we got to key off that earnings tomorrow. And if we start to see that squeeze, let's turn our attention to a few energy companies before we wrap up here. CCJ is one that I've been kind of working on since it broke out back here on April 26th. It did fade option. There was significant option activity in it that day, as well as UEC as well that week. And again, we kind of tested it, bounced, tested it again the second time after we finally broke out on April 28th on the earnings. And we're seeing a nice little bounce today. Now, we did fade from our highs. Would have been nice to see this kind of close at highs if you're looking for a continuation. Where we're at, we should look at kind of the midpoint here at about 2750 should hold. If we break it, look for a retest and a hold of 27. But today's trade in CCJ specifically is out there a little ways. So, and it's a bit out of the money as well. We go out here to September. It was out here at the $31 strike price. So what's happening is there's not as much gamma in this because it's longer dated, but it's an example of money flow. And we take this as the seed wave I drew all the way back here before we broke out. The idea is that, $32, a retest the prior high at 31.30. This area up here is a very reasonable target. So on a bounce off a retest and a bounce, or a hold and a break through today's high, this gives you that potential target around 31 in the coming weeks or longer. And it gives you an opportunity to play that upside in CCJ and other uranium type stocks. They tend to move in tandem. As we turn our attention to energy, Antero had a really nice day the other day. This was last Thursday, high volume. We've had a number of higher volume days since the earnings. Of course, Exxon today, I think announcing the acquisition of PDC. It's what is it? I think it's PDC, Pioneer Drilling. But the idea is that again, some consolidation in the space? Are we going to see firmer oil prices? What's going to happen with drilling? The rig count maybe appearing to kind of reverse a little bit. We never quite met the expectation of record production in the spring that Energy Secretary Granholm had kind of promised us going to the spring. And again, refining capacity right now, we're running about 92%, just below what is really kind of that average, around 94. So again, there's not a lot of potential demand for oil other than if we start to see a resurgence economically. But oil supplies right now are not exactly, we're not necessarily overflowing other than what's coming from the SPR, Strategic Petroleum Reserve. So we've seen some nice movement recently. And if oil prices can continue to stay above $65, this does allow these companies to be profitable on their production and even give them opportunity to expand production. So 65, 70 isn't exactly a bad space for energy-related companies. We're looking at Antero. This is an oil and natural gas company. And again, there's some midstream in there as well. So again, but we're having a stock that's consolidating near lows, range bound between 20 and 25, near a breakout. And today, what we're seeing with Antero, and again, probably take the high from Friday as a trigger in Antero, we're seeing some upside spreads being put on Antero, specifically a 5,000. Let's look at it. 17 Jan 25. This is out there a little ways, so it's more indicative of money flows here. But 5,000 at the 35 strike, selling 7,500 to 55. This 55 strike. So again, just some expectation that the ship is going to be righted in the energy space, and this may be trading at significantly higher prices over the longer term. So again, while this doesn't create any immediate effect on the stock price in terms of gamma, it is an indication of money flow. And you also saw that today in Murphy Oil as well. Again, bounce off support, testing the same level from March. $40 certainly seems like a pretty reasonable short-term target. This one is more short-term in terms of its trade, and you'll see out here. Selling, I think it was earlier today, it was 1575. Sorry, buying 1575 contracts of the 3750 and selling 3150 of the 40. Basically saying what? We're expecting a near-term move to $40, but not really much of an expectation to go above it. And so again, finishing strong above yesterday's high today on a closing basis, looking for a near-term move back towards 40. You could look at today's low as kind of an exit point in the near term as a swing trade for Murphy Oil. That's all we got for today. But just remember, given where we're at, the Unch'd Effect, the maybe some of the uncertainty of those types of feelings you're feeling right now, it just says, look, just keep your cash levels probably a little on the higher side. Be selective of what you take on the bullish and bearish end, and just kind of let this little season pass. Because the reality is we're likely going to see a very significant move either to the upside or to the downside. The options market's certainly pricing in the potential downside effects here. And there's a lot of data that suggests that that's the direction we ultimately go. But the issue is sometimes you go higher before you go lower. And so again, that's that gut feeling you probably have right now. It says, I'm not sure I want to just jump in with both feet to the bullish end of the pool. And where, again, it may actually be pretty shallow. Anyway, folks, we'll kind of wrap it up there. We'll see you back next week for the video. Have a great one.